Good evening, everybody. This is Ken at Tortoise Capital with the Strategy Podcast for May 7th, 2020. It's getting pretty bad in the time of the virus and Groundhog's Day when I have to consult the date stamp on the bottom of the screen to know what month it is and probably what year it is. I know it's Thursday because I took the trash out yesterday. And I have 5 master's thesis defense briefings to take tomorrow intraday, so I'll be doing that most of the day. Fortunately, I didn't have any scheduled for today because it was awesome. All of the things we talked about yesterday, the treasuries is going to be very instructive. SPCE case study continues to pay off. Simon Property Group, Brazil. It was just all good this morning. And maybe because I turned 62 this year, I'm fighting myself to go back to work as I start looking at some of the dumb things that large bureaucracies do. Like, I found this opportunity to study from a world-class professional on how to do online educational courses to make them really attractive to people, that people want to learn, that they really love, because I'm trying to do better here. And I want to do that for the Army too, because we've been doing everything through distance, and we have adapted poorly. So we're just basically doing Zoom and talking about things, but we're not really optimized to deliver to distance. And since this is only the first of the next pandemics to come, I'm trying to convince the Army that we need to get in front of that and really redesign our courseware with distance delivery in mind, because it will only make it better in person. So I put together a little proposal a month ago to have them pay for 5 of us to do that, and I could supervise them, and then we would give them a good program assessment, and then be able to scale that to all our classes and be a pilot program. We are still squirreling around with that. If I had done what I wanted to do and just bought the course myself, I'd already be done with it. And it's just frustrating to watch how stupid we are. But large organizations like dinosaurs have a nervous system that behaves in certain cycles and patterns. And we've got to be mindful of that. And that's kind of what we're about, is trying to figure out how we operate. And I'm always kind of torn between going deep into the details. I hate the idea of having an unexpressed thought. And I want you to know the things that I've thought about to inform you. At the same time, there's a certain drinking from the fire hose phenomenon with all this stuff. And it's really in evidence as I was putting together this sense of tortoise kata. So I've been studying kata in terms of Toyota production system and my own martial arts, and reading Musashi, doing the essentials. And so I started jotting down the essentials. I did that once already before with the 37 strategies document, which is that it started off as the top 10 ideas and then became 37, now it's up to 43. And I started just writing them freeform today. And these are the absolute essentials that I think I want the hybrid workshop guys to come out of the course with, that I'll be satisfied if you could name, explain, and demonstrate these things. To flash back to the Army. Name, explain, and demonstrate. So in the upper right-hand corner in this set of katas, because I'm working towards the idea of what would a yellow belt be, green belt, blue belt, brown belt. I know what brown and black belts are. Brown belts are when you can do a monthly debriefing with your histogram and your system and describe what you're doing and self-assess, and have it with a learning journal and a histogram and a stable system, and brief the results, and then come in with reasonable proposals for action. That means you're a self-directed trader on that system, or at least for that month. The black belt test is when you come in and brief your whole system with rules and your studies, and a full up system definition with double peer reviews, and then have that filmed and run the gauntlet of all the other black belts that are studying it. And that's the kind of stuff Kim Anderson does when she's designing courses to teach at the Tharp Institute. She comes and practices that stuff. So that's what a black belt is. A brown belt, you can get through the little monthly debrief. You've seen a number of those examples already from JG1 and JG2 and Eric and Barry. Those are kind of, and the Euro guys are doing this really well in the Coaching 2020 project on Basecamp. So those are what those things look like. So I'm working kind of on the intermediate ones, and I'm going to start with this list and say, what's the minimum mission essential that a yellow belt would have to have so that you can actually start trading forward with a systematic approach. So I'm going to use this little palette right here to start with. So these were, after about 10 minutes of thinking, this was, I'd filled up that page, and this feels about right. There may be a couple missing, but this feels pretty good. And then for each one of these, I think, and I'm going to clean this up and give you a better form, but I want you to see in the rough form what that looks like. So for each one of the concepts I'm about to talk about, I mean, I think I never heard of it, vaguely heard of it, uncertain what it means or where it fits in the ecosystem. Familiar, I could probably define it and place it in the ecosystem one slide. Next level up is locked in. I got it. And I was thinking about putting another level in here, but really just I know it. I'm aware of it. Familiar. Locked in means you've crossed an important line. I think when you go over it's locked in. It's now yours. So I think if I was going to draw a line in my mind, I would go something like I would say probably that's the tipping point. I think right there. It's not useful until you own it, and this means knowledge in action. I think this is probably on this side. It is, on the cognitive thinking about it. This is doing it and locked it in. Next one up, you could teach it, and then true believer. Like not only could you teach it, but dude, you're living with it. And then if you were to do an assessment of these things that cover it, you might say, hey, I'm going to prioritize where in my learning journey it needs to be. This feels about right. This is actually more useful than Bloom's taxonomy of learning because it is a self-assessment and it puts you in a position of making a claim about what you know and why you believe you know it based on what evidence. So I really like that. I'm going to write a paper on that one. So imagine a form in which this is, you have those categories in vertical columns and you have a list of and sets of the information down the left-hand side. And I'll turn that into something like the belt tests and all that stuff. I don't know if that's worthwhile. I know brown belt and black belt are useful, but everything short of that, probably doesn't matter. So the categories. These in the upper right, there's Eugene and I were talking about this through some email exchanges about the power of metaphor and icons and placeholders in language, at the same time being mindful not to confuse the map with the territory. But in some ways, these act as intermediate focus to get things done. I'm reminded of the Mahabharata where, the practice of the discipline or of the religion or the whatever is how you climb the mountain, but at the top of the mountain you get off the donkey and then you finish it on your journey. So the donkey is just how you get there. It's not the end stage. So many of these concepts are like that in that they are descriptive and metaphors. They're placeholders. And part of it is you embed beliefs and energy and confidence into those ahead of time so that you're prepared. And then it becomes almost like a magic spell. You can just go for it. Like a confidence spell is what you're really doing. So these are metaphors to help me with my understanding of how things tie together. So the owl has a certain role in our ecosystem. The idea of the tortoise, slow and steady wins the race. The monkey mind, but also the creativity and brute force. The idea of the dragon is that mystical power in the river that acts in a certain way with respect to the herd to help us interpret rapidly what's going on. There's so many indicators on there, or there can be, and there's billions of people slinging trillions of dollars, and those indicators are reflecting all of that nervous energy. And so being able to rapidly assess and artistically describe, that's what these things do. The idea of Crocodile River has a very powerful imagery. I would add a tiger to this one. The idea being that there's apex predators out there and you're not one of them as an individual. And then the idea of cows, that big fat creature that we want to slowly herd to market and have a sacred relationship with and part of our ecosystem. So those anthropomorphisms all have certain roles to play. And being able to talk about them helps you understand the depth and the integration of a bunch of these different metaphors. Row 2, this first category, 5 essential patterns. And this whole project in my head started coming out with the hybrid frog kata. So I got to be able to do that on one slide. That'll be my challenge for tomorrow. And I think I've given those speeches already, but not in a formal one slide kata. So that's my next step on this. So the hybrid frog, which is how we open the day, and all of these sum into chain trading. The sum of that stack, hybrid frog plus owl minus the etc., gives you the chain trading. And each one of these is a standalone pattern, but taken together in a formula for chain trading. So the hybrid frog that gets us started each day, not directionally biased, but follows price quickly. The owl pattern, the collapsing dragon pattern, the emerging dragon pattern, the sideways quiet channel pattern, and then all of them in a chain trading approach. So those are the only 5 patterns I think you need. And yeah. The next group here in the middle with this little insert, these are the 5 lenses. What are they? Lenses. Each one is a lens which brings certain things into focus, and the things that you can see and the language you use to describe the things that you see are things like the use of the river, the dragon, the flood plains and pockets that you see and all that. And in order of sequence for importance, the 4 seasons of MACD for the general orientation, the RLCO Bollinger Band framework, that's the 4 regression lines, 10, 30, 90, 270, and the 3 layers of Bollinger Bands, Z1, 2, and 3, 30 period, plus or minus 1, 2, and 3. So that is all of these lenses allow for a sense-making apparatus. Regression line fractal framework that allows us to focus strictly on those 4 regression lines and what they represent in a hierarchy of sense-making about price. It allows us to make hypotheses or claims about what those different price levels could mean in the framework of sense-making. And then the regression line fractal framework means any time period, all of the interpretations are the same. So it's relative in that sense. Then the idea of pinch and stretch, which is how a market or a target inside that market expands and contracts through sort of a natural breathing-like process that when it's exceptionally compressed, it pinches, and then it stretches exceptionally, and it goes through periods of expansion and contraction, and those turning points are really crucial. And so the degree to which it is pinching or stretching and where it is in that life cycle now gives us a very powerful metaphor for that cyber brain, that bio cyborg that is the market, the combination of AI and rules and algorithms and people and emotions and time. And then finally, support and resistance, a structured scaffolding of price action at a specific price level. So that it's non-dynamic in the sense that things happened at that price. It's contingent on the price and not in as much in time. So taken together, these 5 elements give us a multi-time frame, multi-lens analysis. And so that's the thing that's missing on there is the MTFMLA, multi-time frame, multi-lens analysis. That's so important that I'm going to type that in, MTFMLA, because I don't want to forget that. Yeah, those that's the components in there. And so then the river, dragon, floodplain, and pocket are ways in which we can describe the different conditions that we see. Over on the right-hand side is a bundle of indicators and tools, constructs that we use, techniques that we use, indicators that we use that build out the sense-making apparatus that become components and parameters for these different patterns, going just from top to bottom. And frog box, the hybrid frog box, the minimum manageable risk box, the NDX, that look back period that is similar to Williams percent R but lagged a time period. We use that a lot to help us understand trade location in the look back period so that we can project forward and infer, make predictions about the possibilities of sharp moves at turning points. So it has to do with the life cycle interpretation. The extremely important idea of the range stat, which combines the idea of the average range plus a frog box to give us the maximum reasonable intraday move. That one is absolutely crucial. And all you got to do is look back to yesterday and the idea that Simon Property Group has a minimum manageable risk box of $1 and a range stat of $8. The idea of the opening range 5 to help us start calibrating the moves in the opening minutes of the day. The 4 regression lines, 10, 30, 90, and 270, in any time frame, what they mean is always the same. So the 10 means price, the 30 means the health of the market. The slope of the 30 is the health of the market. The 90 is the health of the next higher time frame, so it gives us the larger immediate context. And then the 270 represents the long-term fair value of as interpreted by 2 time frames higher. The idea of the 4 seasons, which applies not just to MACD histogram, but also to the slope statistic, the risk Z, the curve itself. That's really important. The fractal nature of markets, so that we look for patterns that have synergy and consistency across multiple time frames. The same, what we're doing with the regression lines, for example. Lower column 1 in row 3, a collection of important psychological elements. I guess I should add craft knowledge in here. Craftsmanship, that should be in there. Zero state, the owl meditation for continuous improvement of your psychological health and well-being. It's a formal process which you can do a speed run on and anchor it with totems of animals or sounds or songs or smells or feelings or all of them, and turn that into a rapid fire ritual that gets you back into the zero state quickly. And it's worth doing anyway. The idea of the house of trading that will withstand the weather and the climate and provide defense, and gives you 360-degree security and accounts for all of the business-like processes that you need to be able to run a sustainable operation for the next 3 generations. That's the time frame you got to be thinking about. The idea of the ecosystem, you drop your house of trading into an ecosystem, and that's all of the things affecting us in the environment. And then this notion of, are you a hunter or are you a farmer? Are you a gatherer or are you a trapper? Or as a way to tap into that self-identity and feelings about yourself and what you're trying to do, so that you can check to see at the root level if you are aligned in your actions and systems of choice with who you feel you are as a person. We want that alignment there so that we're not fighting ourselves. And that can happen when either your rational mind isn't aware of or discounts or works against your emotional center. So getting that sense of identity is pretty crucial. I should say there's a speech or 2 or 5 on each and every one of these things. So, we got some research to do and some indexing. The next group are the tools of the craftsman. The things that we use to trade frames, to make frames for our trading, the scaffolding. The idea of the RLXD is so crucial, and that it's not a reason to buy or sell, it's the trigger. And what makes it an action as opposed to just an observation is the context that surrounds it. So it's not a system in and of itself, but it's a nutritious, delicious part of every or many systems. The idea of no lose plus dinner for 2, that is so important that it probably also should be in the psychological area as well. But it's actually, it's a formal tool that we use for identifying when to take price action. When do I move my stop away from the initial stop and lock in no lose plus dinner for 2? That's the psychological, spiritual moment when you're not going to lose money on that trade, and it makes a psychological difference. And so when you make that move and strike hard, strike fast, that's a crucial moment in the trade. That's when your seed capital is no longer at risk, and now it's a science project. And that's connected to that little hierarchy of how you manage trades with your management team and what all they've all got to do. And we had a good speech on that earlier this week. The whole idea of trade framing, scaffolding in a standard way with templates and processes to get us locked in. Understanding the difference between the execution risk, which is geared towards the particular context and pattern based on what's happening on that trade, and then the position sizing risk, which governs the set of trades in that time frame or in that category. So if I'm day trading, my belief, my practice is that I have a standard position sizing risk for any, for that target. If I'm going to day trade him with a frog, with a hybrid frog, with a owl, I have a position sizing risk that governs how big that position is going to be. The details of the execution risk simply allow me to fine tune that entry to the local chart and those actions, and it affects the R capture. The R capture is measured against the position sizing risk. I default to a frog box as a rule. And then the execution risk simply as a refinement of that. So I'm not getting unique position sizes on every trade that I then have to spend mental energy on and worry about how much risk I'm taking. And no, I just treat them all as a poker chip and a certain amount of risk. And then the closer I can shave down that execution risk, then I'm saving fractions, and then I can trade in a relaxed manner. So the idea of auto framing, which started off as a way to rapidly categorize and evaluate and prioritize many different swing system signals when I had more signals than money, the auto framer became a way to rapidly assess the reward to risk ratio in a standard way. And then after a couple, 3 or 4 years of using it in that way, I realized finally, oh yeah, it's actually a strategy itself that I can trade on the basis of trade location and the relative reward to risk without any preceding magical pattern. It's simply trade location and volatility, and the 10-day high or whatever you're choosing as the standard height allows me to auto frame the trade, and it's a very relaxed strategy. I like that so much. That's how I organize the ETF 30 and the Dow 30. The critical idea of a critical state and why that's important. And I should add second mouse in there too, now that I think about that. I like second mouse so much that I'm going to add him in there. Second mouse. Which means probably got to have a mouse up here too. How did I miss those little guys? Well, this is what happens if you give me a whiteboard and unlimited time and put you guys on mute. I end up. This is how the top 10 ideas for day trading became the 37 strategies, which are now 43. So the idea of critical states being how we find good MMRBs. The idea of core and turbo as a trade framing construction to help us integrate the insights from different time frames holistically. Then finally, on the right-hand side, these patterns and processes that govern what we're doing. Plan, prepare, execute, assess, sustain, improve, and action. That's that daily debriefing that gets us through it, and with a focus on what we're going to do about it with our accountability partner. The idea of knowing your histogram as a way to take standard trade packages and make decisions on the basis of significant evidence. The use of the 4-column learning journal to make sure that we are approaching our debriefing and our analysis of the game film in a standard way to get the maximum value out of it. And then I like sustain, improve, and action so much I wrote it twice. So those are kind of the essential elements of Tortoise Kata that I would say. So if you're in the sound of my voice, you're in the hybrid trading course, and even if you're not, imagine me getting this into a clean one-pager and then reflecting this notion of a scaled proficiency that you're assessing where you are. And this is probably, I drew that in blue, not intentionally, but that's probably a blue belt when it's locked in, because blue belts, they can make some throws. You know, when you're in the gym, they're randori, their free practice is pretty good. That's probably what purple belts do right there. And that's probably, brown. Imagine that were brown. true believer is probably not the right one. It's applied, self-directed on that concept, and then probably the top level after that, when you are fully self-assessed and self-directed. Oh, there you are, black belt. That could be what it looks like right there. So there we are. All right, here we go. Thanks for hanging in there. So here's today's market, and let's see what we got. So it closed poorly yesterday, and I was at a negative feeling about that one. It was a kind of a sell-off kind of a day, and held right at the edge of the dragon. The 10-day low moved up to here. The dragon was still rising, still is. It had a little gap up and recovered all of that lost ground, made a run, and then couldn't hold, and then closed just about where it opened. So it almost, feels like a doji just bobbing along on the top of the dragon's back, a dragon rider right there. On the way up, it's got to get through the high of the day, which is also that RL10 peak. It has to get through that. 290 is the magic number. Gets above 290, and it's free and clear to the 10-day high, which is 295-ish, from about 7 days ago, 6 days ago. And then if it gets through that, it's 303 at RL270. So that's the 10-day frame to the upside. On the downside, you got a low of the day, the dragon bottom. The PSAR stop right here is solid at 283.16. Tomorrow's 10-day low is going to be about 279. Today was 278. So that's our 10-day trading range. And it's grinding. Notice it's not as strong on this urge as it was on this rebound. So it ran and then couldn't break through further, couldn't get out of, past that floodplain here. On this price level, it could not get past the previous Z2, and then the sharp sell-off all the way back. And now this run-up is not as strong as that one. So this third leg is the weakest of the three legs up. On the positive side, you still have the river sloping up. There's the Bollinger Band mean. I'm going to start drawing that as an extension too. I think that gives us an interesting time series to look at. The PSAR extension still strong. Here's tomorrow's PSAR stop. The dragon is sloping up. We are above that level, so as long as we're north of that orange line, we're on the right side of justice. And then the RL30 extension started to slightly expand and go up again today. So cautiously optimistic. Today was a day that it could have failed. Like you could imagine, if this had been another red day, and then tomorrow, Friday, violating, that would have been horrible for the weekend. So tomorrow's going to be a very interesting Friday. We're still in the fall, so we have a long bias, but we're cautious, like always. So the fun is done. This is hard work. Every day going to work, making bricks. Make your bricks every day and be ready for the winter. What worked today in the sectors? So we'll start with the S&P. It was at S&P at 121. Then this slight improvements include, let's see, the Aussie dollar had a rebound, so we stopped and reversed our swing trade. You'll see that in the speed run. Clean energy, real estate faced with the small caps, oil, exploration, Japan, tech, EFA, treasuries, Google, and lumber, all were, marginally better. At 2%, that next, it felt like a critical level. So these were marginally better than the S&P, but better. Better than the S&P. Materials, Simon Property, McDonald's, Finance, Silver, Home Depot, Energy, Chevron, Cliff, Wheaton Precious. So the reason I like Wheaton Precious as the target instead of silver, on a day silver's up 2.4, Wheaton's up 4. So it gives us kind of a leverage play. And then much better than the S&P today. Triple Russell, Devon Energy, oddly enough, the triple inverse oil. So that makes Devon Energy just a winner. On a day when oil was down, Devon Energy is up large. Boeing, dead cat bounce rebound, not believing it. And then the rocket ship, Virgin Galactic, acting like another rocket ship again today. At one point was up almost 12%, settled in at 7%. What was worse, you may ask? So mucking around with the S&P, Apple, Mexico, Nucor, and U.S. Steel, all kind of tightly clustered in here with the market. Slightly worse, the Dow at 0.87, emerging markets, Amazon, Cisco, Wynn, and Gilead. So a couple of the tech leaders not keeping up. Much worse, and in the red were healthcare, Tesla, Cat, Walmart, oil, Alcoa, Brazil, and volatility. So the big losers today. Let's see. I want to talk about two specific flashcards today. One of them, this is my little updated note tracker for when I'm going through my daily report or looking through the charts in the speed run, and I want to just take special notice of something that I want to prepare. On the left-hand side, these are the mechanical swing systems. So if a symbol fires on one of those and I'm interested in preparing it, then I record it in there. These more relaxed strategies and styles like max pain, range compression, pinch and stretch, squeeze, 4 seasons, all of that stuff. If it's just a strategy. And then if there's a continuation pattern, like in here, things like Aussie dollar, Virgin Galactic, Simon Property Group, Home Depot, Mexico and Brazil, those kinds of things. Because I'm already invested in the trade frame, and it's not over yet. Up in here under the patterns is where I'd be putting things that fired for the new. I'm looking at all these things for their influence on market condition, and they are markets themselves. So there's the U.S. markets, Euro-Asia, Euro 350, China, Latin America, Brazil. Other assets, so outside of equities, but treasuries, real estate, gold, silver, USO oil. The sectors of the S&P, and then the frog champions. Now I've added some in here that are not frog champions based off of Tony DeQuick's marvelous work. But all of these from here on down in the highlights are ones that I've added because by inspection and through practice, they behave intraday and on swings like frog champions. And I'm treating them like frog champions, but adding U.S. Steel, Virgin Galactic, Simon Property, lumber, real estate, inverse oil, and Wheaton to the formal frog champions. So I use that flashcard to quickly start narrowing the purpose of a plan is to be broadly aware of the opportunities pitfalls, themes, trends, actors in the ecosystem. So you want to be broad in your considerations, and then you want to narrow it down to a set of actionable things to prepare, and that's what this is helping us get to. We go from divergent thinking on the plan to convergent preparation as we build out the trade frames for each of these. So a note sheet for your use. This one, I want to talk about the RL30 slope statistic, because this is like for me, a fractal. Therefore, any time frame, any target, sector, or market, a way to rapidly assess what's going on. So we will remember that the straight line regression is, and I'll just use 30, imagine 30 prices going like that. And then the regression line is mathematically the best fit line that minimizes the amount of error away from that central line. The slope of that could be considered the strength of the trend in the direction it's pointing. So that would be a downward trend. And then this over here would be an upward trend. So to get a moving average, least squares moving average, or a moving regression line, what you're doing is each day you're dropping off one. Here's our daily call at this time. So each day you're dropping off the last one. So that yellow dot comes off, and then you rerun the regression line, and then wherever that perfectly computed price is in that last candle is the regression line price, and that's the dot where you see that regression line being drawn. And so when since that's changing all the time, you get that moving activity. Each time all we're doing is connecting those dots. And then in the same thing on the way up. So that moving regression line then is tracking without cluttering with 30 previous regression lines. It's just taking the endpoint of the regression line of the last 30 periods and connecting it. Well, for some look back period, and let's call it 180 days or 180 time frames, let's imagine that you computed the slope of that statistic, of that regression line. And then there was at some point in that last 180 days, there was the steepest upward slope it had achieved, and then the steepest downward slope, the minimum slope it had ever achieved in that whole period. And then if you ranked all of those 180 by maximum slope down to minimum slope, and then you found the average, let's just pretend it's 0, and then you found the standard deviation of the spread, and then you could then compute a z-scored ladder so that the z-score of 0 would give you the slope. That means that the slope of that line, doesn't mean the slope is 0. The slope statistic, if it's 0, means that it is equal to the average slope of the last 180 days. And then if you get a z-score of 1, then it just broke out of that region. It's now one standard deviation above the average slope, and that's where we might really say, yeah, that's clearly into the bullish territory. Now, I sort of use a boundary of about plus or minus a half or 2/3 or whatever, straddling that 0 line, so that it's like almost coming out of its own river. And I watch that time series as how that slope is improving, and then the z-score tells me how strong it is. So if you can get it as it's starting to accelerate out and up, what you have is an emergent leader. That's no different than the way we use the idea of great, good, weak, and poor in the 4 color codes that you've seen in other places, or the traffic lighting. Well, that basic frame of reference gives you this kind of an array, that this is not just a 1 to n list, but it's clustered based on math, so that between 0 and 1 and 0 and -1 z-score, mathematically you have about 1/3 of the data from average to z plus 1, about 1/3 from average down to z minus 1. So you have collectively about 67%, 2/3 of those 180 days, the slope falls inside those. So when you see a z-score more than 1, that's really in the top 1/6 of the positive slopes of the last 180 days. It doesn't mean the slope itself is positive. It just means relative to this previous 180. You could imagine if you had 2 years of continuous selling in a horrible bear, that the best slope might be the one that was least sloped. So it is a relative measure. And but what it does is it gives you a way to use math to offset your lion eyes. So the z-score ladder works the same way for classifying the health of the market when you apply it to the RL30 as if we were using the Bollinger Bands as a stack to interpret the movement of price and its turning points as it flows through. So that is a robust idea because it's mathematical, it's adaptive, it's disciplined, it's computed every day. And it gives us the ability to look beyond our lion eyes. And when you compare 100 symbols based on their z-scores, there will be some relationships that emerge from that you could not tell on the basis of looking at 100 charts. You just can't hold that much data in your head, being a mammal. It's not the way we're constructed. So the z-score is a useful simplification that is very powerful and disciplined, systematic, and mathematical. It's almost not even fair. That's how good it is. So the slope statistic. For those of you keeping score, the alpha statistic is when we take the slope statistic of the market as the baseline, and we take the slope statistic of any other target, and we subtract the market from it. So we detrend it, and that gives us the residual alpha. So if it's a positive number, that means that thing is stronger than the market in terms of its slope statistic. If it's less than 0, then it's going to give us a negative number, tells us that on a relative strength basis, it's worse than the market. That alpha statistic is worth millions of dollars in terms of long-term value. Unbelievably powerful. And that's unique to us. So that's the slope statistic. When we get to the daily report, we're going to spend a little bit of time on there and just watch how smoothly that RL30 slope traversed that z-score ladder from -10 to +6 and gave us some pretty interesting signals along the way. When that thing breaks out above or below 3, in the same way that price that goes beyond Z3, something extraordinary just happened. Yeah, when it gets Z3 is kind of like it is the boundary between rational enthusiasm and irrational. When it goes beyond Z3, something just broke and all bets are off. But things will stretch out to Z3 and then ordinarily will snap back. So when we look and see something like the slope statistic has gotten above 1 all the way up to 2 even, and then it crosses over its own 10-period moving average, that is quite often the signal of the end of the trend that you could easily see in price. And same thing on the bottom side. Well, this is what happened about 35 days ago after that enormous sell-off, and this started getting better. Now, this same pattern happens in our interpretation of the risk Z. So this is a robust technique that you really need to master. You need to lock this in. This is not just something to be familiar with. This is one that you can bank on and lock in. Fundamental, necessary. It may even be sufficient. That's how good it is. If I could only pick one thing to do market classification with, it would be this. Just studying the timing. Because the slope is nothing more. It's directly derivative of price in a strong adaptive way, and you can't even argue with it. That's how good it is. So the slope statistic. Okay, shifting to some trades. Nice work in a disciplined way from Eric and the Euros, one of my favorite bands. It's posted in the chat room. A model of clarity, calmitude, and working his way through his process. So really like what they're doing. This was, let's see, this is Simon Property Group. So what we had, this is the closing of the swing trade today. So in the speed run, you hear me say about 3 days ago, we got short when the RL10 rolled over and price re-entered the river. I was playing from river to Bollinger Band mean to the far side of the river and the PSAR. That was my play. It was basically a replay of this trade where we got short, short, short cover, and it went from peak to valley. This time the peak happened a little bit lower, and the river was still sloping down, and the dragon had started to stall. So on the lower high, got short, added one when it got through the spine and took out the low of that first day, kept the second one when it left, or a third position, I should say, when it came out of the dragon, and closed well. So then we moved our stop down to the blue alert line. And then today it was a morning hook. It opened about where it closed, made a higher low of the day, and as it started moving up the stack, that felt like enough on 3 positions. So we just cashed it there and then got flat. So that's a very orderly swing short in Simon Property Group. This was Virgin Galactic, the rocket ship. I can't do it any better than this. This is as good as I can be. And it was pretty good. So we got the long here when it took out this high. So it, I'm sorry, yeah, we were short, covered, stopped and reversed, added one when it took out the daily high, added a third position when it did the PSAR, added a fourth when it broke above the previous Z2 excursion here. It got up to 290 or 2090 today, and I locked in 2075 on the 4 swing positions, plus we had 3 turbo positions intraday, and got all out at 2075, excuse me. So good trade. I can't do it any better than that. So this was Virgin Galactic intraday. All right, so what this chart is showing, excuse me, let me get this. What this chart is showing is these 3 thin blue lines. Those are price levels that we had identified from the daily frame, and where we kept a piece from the turbo trades intraday. So there was a swing trade here because that was the mechanical entry. You notice how it went from the VWAP and then it bumped up the VWAP and crossed our blue line. So we just automatically entered on the basically a mechanical entry. The second swing entry we kept was from a turbo trade in which we saw the high, the low that held support at the 270, and then the emerging dragon, correct. So that was a turbo trade, and we kept a piece on the swing. The next swing that we put in was this one. And then on this pattern here, as it got to 2093, in the chat room, I said, you know what? I'm locking in 2075 on everything. And that was where my routine management stop was, at the blue line. And I said, I just felt, I had a feeling that it felt like it was enough. And so I just jumped the stop immediately up to the skin of the dragon, 275. And about 7 minutes later, that thing just rolled over in an orderly way. And it came back and closed at something, I want to say 1950 or something like that. Came all the way back down here to the VWAP, essentially the VWAP magnet. So that was as good as I can manage intraday. So this is the same idea now in treasuries. You will recall from yesterday's speechification that I said it looked like an anomaly and could be a bottoming tail. So I was going to put 2 positions on long at this blue line based on it got through that price level from the daily chart, as we talked about. So I initiated with 2, and because it was working nicely, I added a turbo position. So this is 2 plus a turbo, 2 swing plus 1 turbo, a second turbo position on this emerging dragon above this hump, a third turbo when it broke out of that Z3 pinch, which you'll notice is also a super pinch because everything is stuck inside that, all the regression lines in a tight pinch, and it broke out. So that's the third turbo position. And then this is the third swing because we put 2 on here and 1 there. So that's the intraday stop on the turbo positions and the 2 swing positions. And then I will keep 1 swing position overnight at this level. That was my plan at around noon. So that was massive goodness. That was a whale. Meanwhile, on Brazil, so we had a swing position in on Brazil, you'll remember from the speed run. And 2 days ago, this is where we initiated that swing at that red line. And then it closed well. And it closed here. So we were slightly in the money on the swing from Brazil. And so we moved our alert stop yesterday down to this blue line so that we could lock in a piece. And then if it gapped above that line, we would just get out at the open. But if it opened below that, then we would manage the trade intraday. And that was yesterday's VWAP. And then today, it gapped down all the way down to this orange line. So that was the open. So as soon as it gapped down that much, I noticed the gap down and I adjusted our alert stop from this blue line and I just locked in that red line. And I'm going to be all out if that gets hit. And that way I've locked in the gain from this red line at least to that red line. So I'm not going to lose any money on this one today. So we've got our 1 short position locked in. It gets into this little choppy action, and then right here, what is that pattern? 3, 2, 1, collapsing dragon. Correct. It's below the VWAP, so the turbo stop is just above the VWAP or the peak of the RL10, so like the top of that box. So that's like a 20 cents. If you're trading $400 of risk per trade on turbo, you could buy 2,000 shares short. What matters is the dollars per share at risk. So this is the first turbo short, and it fails to here and exit here at 22.35. So that's 55 cents on 2,000 shares minus 100. So it's $1,000 if you're trading 400 shares. That's 2.5 execution risks. Trade box number 2 is an owl long, and it failed. So quick fail, stop and reverse. Now this is a pocket entry or a collapsing dragon, hoping to get another one of these moves, but it didn't. It rolled over, and so that's basically a scratch. Not quite an owl yet. Trade box number 4 is a genuine owl, and it crosses the RL270, and I'm front running the crossing of the VWAP. It works. It holds at the VWAP. I'm at no lose plus dinner for 2 on that one. Second position, rockets up. So I just take the RLXD and then I'm out. And then those other trades we were managing in SPCE, SPG, and treasuries have taken over, and that's kind of my span of control for the day. So at this position here also, I should say, this last green position is where I exit the swing position that we started from over here, and I had locked into this level, and we were getting close. So when I'm buying this one, I'm out of that other swing. So we've got a short position, some turbo short that worked, a turbo long, 2 scoops that worked, and now all flat. So that's that. Let's go to the speed run. Lots of standing by today. So a yellow dot means that I'm just stalking. So Alcoa stalking. Apple, we're long 1. I'm moving my stop up now to here. So we're still long this one, and I got a tight stop, so I've tried to lock in that 2-day gain. Just stalking Amazon. It's not as impressive as the other tech leaders. This is Aussie dollar. So we were short 1, and then it rebounded all the way back up from the PSAR where it found support. It opened where it closed, and on the way up, I just decided to scratch here. When it entered the dragon, I got long, and then it moved all the way to the past the RL30 and closed very well. And I put my alert stop here at the skin of the dragon. So I'll be managing that one closely. So we scratched the short, stopped and reversed, and we're long 1, feeling good. I will add a second position if it breaks out and continues. Boeing, stalking right now. So we had been short 1, and that was our signal on the blue line. It gapped higher and then started raising, so we just scratched that. Not a scratch, I should say. That's a fractional win, short from the red, covered at the green, so basically nothing. Stalking Caterpillar, I decided to put an orange dot on there if I liked it so much. The sideways quiet channel at the edge of the river, and it's in the bottom of that channel. I really want to start this with a hybrid frog and go long, and then I'll add this position as a swing if it takes out today's high. So this feels like a chance to front run that with a turbo and then turn it into a swing. Try to get through the dragon, and I'll add a position there and add a position at edge of the river. So I'm hoping that this will become a turbo trade tomorrow. Okay. So that's what I mean by orange. Start turbo and then keep a swing. And I'll do that in either direction. Cliff, stalking, Cisco, very tight turbo trade framed on that one for tomorrow. This is compressed into a doji right at the Bollinger Band mean. And Cisco can't stay there forever, and I'm ready to go in either direction. This is lumber. Sorry. So lumber, we're just stalking in that tight range. Again, I will play that in a breakout in either direction. I actually need to make that orange now that I look at it twice. Chevron is next. Let's see. Chevron, we are stalking. Chevron, we're stalking. Next is, let's see, Dow 30. This is just a, for reference one, that long central corridor. It's still hovering in the upper half. I'm just stalking. Devon Energy. If I was a better man, I would have had it today, but I had my hands full with the other ones. But I like this on a tight breakout from this, from that doji. I'm ready to take that in either direction. Okay. Emerging markets, stalking. Tightly compressed inside the dragon there. That's going to make somebody some money when it breaks out. EFA the same way, resting right on that piece. You cannot get a more critical state than that. I mean, really. The dragon is in the upper half of the river. Everything is flat and sideways. The RL10 is oscillated into a very tight range. The PSAR has snugged right up. There's no slack left in this thing. So it's ready to go in either direction. And we'll start that one with a hybrid frog tomorrow. And that's going to pay off, is my prediction. Japan, same thing. I'm ready to go in either direction. It gave us 2 dots of the PSAR staring back at us, telling us it's time to fish or cut bait. So I've got a very tight bracket on that little doji in the middle of a skinny sideways dragon, and it's hovering in between. This is buying it on the button. If I'd been smart, I would have just bought it today because I have an upward bias in it, and then just live with it. But we'll get it tomorrow. Mexico, hybrid frog only. Brazil, we are short from the red arrow from yesterday. Our initial stop was the green line. Today we moved our stop down, our alert signal to the blue line, so we're still short, and that's our decision point. I will add another position here, and I guess like right here. Facebook, just watching it grind north. Look, oh God. I just can't get past my psychological distaste. I need to be a better person. We were short Gilead, and we from the red line. We had our alert at the blue, and then it gapped down, sold off, and then on the way up, I split the difference and exited at the green line. So now we are flat. I feel like I gave back too much of that, but I can live with that. Google, watching it grind north, just like Facebook. Man, the only thing I can say is that I'm playing XLK and technology for the tech leaders, but this is just not good. That's been a 30% recovery on something that has to win in the time of the virus. This should have been an entry like right here. Oh, that's got owl written all over it. God dang it. That's one that got away. Home Depot. This is a grinder. I couldn't pull the trigger today. I didn't have any will left because the other ones were going so well that I just I started getting philosophical because they had really big wins in Treasury, Simon, and Virgin Galactic. I just didn't have the fighting instinct, and I got to get past that. But that's I'll be ready for that one tomorrow. I think that's what the frame looks like. Yeah, perfectly drawn. I just follow my own guidance. It'll be all right. Russell is poised also, orange dot ready to go either direction. So this is really coming into a critical state on Friday. I'm expecting a strong one-day move, lots of head fakes. So I'm going to try to cash intraday winners and try to be as flat as I can justify over the weekend. Anything I'm going to hold over the weekend tomorrow, I'm just stating right now, is going to be paid for with markets money. So I'm looking for a one-day sharp moves tomorrow. I'm short real estate from the red line. Stop is at the top of the dragon. It's basically flat right now. So nothing to get excited about. McDonald's just stalking. It's floundering. Nucor stalking. Clean energy, I got long today. It was one of those grinders. And the swings are a little more pronounced. It was easier for me to believe in this one, I guess. So I bought the skin of the dragon breakout, and using the PSAR as the stop, I'm just going to manage that one right by. I'm just going to let it go just by the PSAR. I'll add a second one here and a third one. That feels right there. Silver sideways grind, although it finally broke today. I got long at the green line with the stop here. But you'll see wheat and precious metals is better. In fact, let's just go right to wheat. I should just always do that. Silver and then jump straight to Wheaton. So Wheaton, we got our second entry long. Remember, it was up 4.1% today, and silver's only up 2.4. So Wheaton, we got the second position in, and then jumped our stop up to just put that second position in the money, and then I'll leave it there and give it some room to breathe, and then I'll add a third position there. So Wheaton precious metals starting a nice run. I'm hoping. Already briefed Virgin Galactic, and this was our exit up here at 2075, and that was all out. That felt pretty good. Simon Property Group, briefed already, got covered that one. Treasuries. So we saw the intraday, but remember this was the markup from yesterday where we said this day yesterday looked like could be a bottoming tail, and so I said I was going to get long with two positions here if it crossed. That was the blue line that got carried over into the intraday, and then that first or that next turbo piece where we added a third position and then a fourth position we filled in later in the day, and then it closed way up here. So I've got my execution stop way up in the Z minus 0.5, so it's right here. I need to add another one if it goes right there, and then add another one if it goes above the Bollinger Band mean. Just make hay. So I'll probably exit tomorrow. Tesla just grinding, not as good as Facebook and Twitter and Google. Twitter slightly better. Let's see. Oil still sideways. I think the bottom's in, but there's not any burning urgency to drive the price back up because demand is not there, and there's all that glut to contend with. So that's dead money for a while. But you could actually start building positions there with the lack of volatility, I suppose. Walmart, this was a this was a long from the green box yesterday. with a stop here, and then today it gapped down below our entry, and then as as I started losing money, I just exited, and now we're flat. Wheaton, we've seen Win just stalking sideways. U.S. Steel stalking. Material stalking. Energy is better, but still sideways, so stalking. And the P1 has happened. It's getting close to where, yes, you would be right. There's an owl beginning to form if it gets down around this yellow dot, because here's the unambiguous move. There's a P1. There's a P1. This it's outside the river. This would be the RLXD right about here, and then the dragon and the 30 are about 2 days away from rolling over. So 2 days from now, there could be an owl entry. Tomorrow, on a significant move, there could be an intraday turbo on that one. So I think I actually want to play it that way. So if I could get a couple days of expanded range, that could generate some money in XLE to fund the swing trade. So I'm going to play it that way right there. Okay, I'll go in either direction. I should turn that into a stamp right there. That's kind of a nice icon for be prepared to go turbo and then into a swing in either direction. Finance, we were short one from the red line, and then moved our signal stop down here, and then it gapped just below that, and as it started moving up, just cashed it. So we got a little fractional swing win in finance right there. Technology, I finally got something going on this one. Yesterday we were long from here. Today it gave us that, and my alert signal was down here. So I'm going to move that, I think, to just below the 1 day low, and we'll lock in a little bit. Okay. I like this one enough, and I'm pissed off about the missing those other tech leaders, that if it goes through that line, I'm going to add two to get back on the right side of the angels. Healthcare, just stalking. XOP. This is one that feels like a dragon, and the reason I say that is, an owl. This was, look how orderly this thing was, and just got horribly smashed, and then a nice, beautiful, smooth, long PSAR. Leg one, leg two, leg three, and then 3 days of weakness, and the PSAR has nestled right up in there, and the dragon's getting flat. This feels like a 50% retracement off the low. There's no burning urgency to go out and find new oil fields. So that just feels to me like if there was ever going to be an orderly sell back to the bottom of the river, back to 35, it would be here. So I'm going to go in with 3 positions short instead of slowly building. I'm going to put 3 on and then manage it like a hawk. So I'm going to be 3 times my usual size on that one. Okay, so that's the speed run, and let's go to the daily report. Okay, so here we go. We've already seen the market. Oops. Slow down, Kenneth. Sorry, guys. I'm going to let that catch up. Sort of, I've induced vertigo there. Waiting for that to come up on your screen. Yeah. Frank asked me, what if price gaps up or down? And I'm assuming you're talking about any of those orange dots. Um, yeah. So if it gaps outside of the yellow boxes, then it's not a swing trade unless it's going to be a hybrid frog, because a big gap outside means it's going to be a big mover. So I'll then play that like a hybrid frog turbo intraday. And then I'd like to see it come back into the yellow box and then make some kind of move. But typically, if it gaps outside that yellow box, something else is going on. I'm trying to think of I think maybe Treasuries was one of those today. It didn't quite get out of that yellow box, but it was pretty close. So I just started, if it opens outside of yesterday's range, especially, then, which is usually what that yellow box represents, then it's not a routine opening, and I got to start it as an intraday only. And then we'll see. Then if it closes well in the direction it gapped, then it feels like the swing trade is working, and then I would keep that. But if it like gaps up and then sells off back into the yellow box, there's no swing trade there. Okay? Does that answer your question? Yeah. So we're back looking at the market. We remember what I said before. We remember we are in bearish normal conditions. We are in the middle of neutral on everything except the 30-day look back, but that's starting to decay a little bit. The risk Z has rolled over, so that we're cautious about long side swings. That's just the sign of an aging rebound, that there needs to be some new energy come into this for it to start working. Just noticing the 10-day Max Payne's, Boeing, Brazil, Simon Property Group. And the Dow Tactical 30, there were 4 things that broke down today: Merck, Walgreens, Procter, and Coke. And then 4 things that made new highs on the 10-day and 1 month. So there's some relative strength there in Home Depot, Microsoft, Visa, and Apple. I think Apple's the winner in that stack. They're a must-own, and they are making all the right moves. And their margins are so wide anyway. A couple channelings there, Walmart and Johnson & Johnson, a 5-day down in 3M. So now you're starting to see some differentiation now among the targets and symbols and whatnot. So there's room to start engineering some individual trades. A number of 551Ws in the ETFs. Breakdown in consumer staples at -4. Big bump up in tech, the Qs at 117, and in XLK. So that tech position in XLK, that's why I want to add 2. If it continues, I got to catch back up into that trend. Otherwise, nothing. Plenty in the auto framer too for your favorites. Pinch and stretch. U.S. oil has come back inside the floodplain at -161 zoom. Z-score there. Treasury still has room to go. It had a nice big move today, but it's still at -0.81 on the Z-score, so it's still below fair value. I just feel dumb for missing Home Depot. It's the strongest stretch from its Bollinger Band mean. I just not well played. Lots in the auto framer to choose from, plenty, and same interesting ideas and regression lines, and lots in the daily squeezes. Today again was a really tight range, so you can notice that the S&P has a 4-to-1 on a pinch. That's how tightly pinched that thing can go. So, and XLK and Microsoft, these things are all poised for a big move on a Friday, and then head fakes and postures with leverage going into the weekend. So I'm expecting fireworks tomorrow. started to get a few things back into the summer. They went summer, fall, summer. So those are the relative strength leaders in there. Notice Apple, Disney, U.S. Steel, Home Depot. Ugh, keep reminding me. The NDX time frame, the big breakouts to the upside: Apple, Home Depot, Visa, the Qs, and XLK. Weakness in Latin America at -6 on its 3-day NDX, and Brazil at -29. That's really its own story of weakness and misery down there, and more is coming. This is that slope stat that I spent some time on the flashcard. So chart 1 shows you the blue line is the straight line regression. Then chart 3 right below it is over the last 30 days or so. Shows you the slope, the z-score of the slope there in blue, and then the 10-period moving average of that is the black line. So it just crossed over more than one standard deviation above the long-term average. Now, it's recovering. This was a time when it could have, should have failed easily, critical state, but so far it's holding. So you got all of that. And this thing has gone on a rocket ship ride here, this as you can see on chart 2, and then that corresponds with where price is with respect to the 200 and on the stretch stat. So this is that market health indicator, market classification check. So that's in the fall, but cautiously optimistic. This just shows you the slope statistic of the last 10 years. Look, that sell-off was unbelievably brutal. If you didn't, you may not remember, but yeah, that's what it was. And the return of volatility back to something like still twice as high as it was before, but quiet compared to where it was. I mean, before this melt-off, this thing was, the S&P's volatility was below 1%. It's still up around 2.2 right now. Look how we fought in this chart on the bottom one. Look how we fought our way out of the river. You know, from that jagged knife edge on the way down, avalanche, and then the first leg up to get back into the river, second leg across the river, and now this third leg has really been petering out, and it's holding on to the edge of the river, but it's tough sledding, running out of gas. And that's everything I want to cover from the daily. Lots to choose from, lots to be ready for tomorrow, a lot of continuation patterns. So that's everything I got, and now I'm pleased to notice that, in fact, I did record this. Hooray for me. All right, guys, take good care, and we will see you in the chat room.